Welcome traders, welcome back to another live trading session. We are beginning this session here, the almost last day of, we have one more day, that is the Friday. Tomorrow we are almost at the end of this month, the first week of the first month of the year of 2026. So looking for trading in this, okay, so in 2026. Now we are beginning today, keeping two instrument on list currently, 2-3 we can look at. One is dollar, XAUUSD, that means gold, and also I'll keep eye on WTI, which is trending at the moment. If you trade WTI, then it's gonna be also beneficial. I'm looking at, first of all, gold, and we will be doing a complete multiple time frame analysis to see that where the market is heading at the moment. So with this analysis, make sure guys you give a thumbs up and also subscribe to the channel if you haven't done yet. And I hope that you are ready for pretty big trading day and week, as we are progressing towards a busy day, right? Looking at the calendar. All right, let's look at the calendar here. Do you look at the calendar? What date today? It's 29th of January 2026. Okay, we had yesterday the nice one, isn't it? Look, today the market is trending. We had one in London session. I think we have sent out in the group as well. Now looking at this session, as we are looking at 2 hours time unemployment claims, and wanna trade this, both of this pre and post news trading, right? And today and tomorrow, both of these days had significant also 2 days. As FOMC statement has come out, the market is also started to bounce. Now therefore we are looking at entry at the moment. Now the fundamental, if you look at the news, Trump watching major strike on wing. Major strike. President Trump weighing major strike on Iran after diplomatic decision with US failed to progress following significant deployment set to Middle East, according to CNN. Okay, so getting some excitement now. Okay, now it's both sided. Let's look at here. Some guys here, had some comments. I think this is from another guy. But you guys have any idea what's driving the market in fact here? Morning? Do you watch news? Have you got an idea what's happening? Now, okay. CHF getting very, very stronger. Okay. CHF is the strongest currency. Do you think it's gonna go up? That's the $1 million question, right? We can trade huge if we know. Okay, what's your thought on that? We will be looking at both perspective, technical as well as the fundamental. Is it bear market? No, it's not a bear market. In fact, bear lives in the jungle. It's bull market. You can find bulls in the market. So we are looking at gold in this, like we see that there is a significant bullish momentum. CHF is the strongest currency or not? Just hit 11 years high. Steering up trouble in Switzerland. Okay. So CHF, JPY. These two currencies, if you really, want be curious about trading, then look at these two currencies. Okay. Now this is a big lesson as a trader. Never, never think that a currency is going up or going down is a indicator of the country's economic strength, right? If you look at JPY, this is 0. In all those currencies that you can see, JPY you can keep at, now it's changing, but JPY you can keep at the lowest point of this weakness of this major currency. I'm not talking about I'm not talking about exotic, okay? With the major, for example, dollar, AUD, euro, British pound, CHF, CAD, okay? So JPY here at the lowest of this strength and CHF at the highest. But both of these currencies is considered as safe haven. Interesting, isn't it? So this is what you need to first understand as a trader. A currency is going down or up against the other currency doesn't mean that the economy is going up, things is going up or going down. It's the internal policy, the monetary policy that set by the central or the reserve bank determines the strength of that particular currency. Now the strength of the currency doesn't determine how strong the job market, or it is determined by the total number of the total amount of goods and services you are importing or exporting. The country with high export expectancy has a different policy than a currency with a high import expectancy of a certain, that determines. So the currency strength, JPY is very weaker, right? If you look at the yen is weak, but it doesn't mean that one of the top 3 economies in the world is one of that Japan, right? So that means weaker JPY doesn't mean that again stronger CHF doesn't mean that it's going to go that. So then in trading we don't have to rely on the strength of the currency. The strength of the currency is because we are trading relative currency, right? We are trading relative. That means JPY against dollar, CHF against dollar, or UD against dollar, CAD against dollar, like that. So therefore, what the economic indicator is few factors, okay? For example, the growth, right? GDP, job, and then inflation. So when you have let's say high growth of employment, less unemployment claims, but low in inflation, that's where the strength of the economy. But now at the moment as a trader, so what we need to look at is not which currency is stronger, weaker, but which currency is trending, which one is giving us entry, because our concern here is to buy and sell, buy low, sell high. That's the thing that we want to do here, right? So now we see that on gold, that today's focus that we are looking at WTI, which broker is the best, which broker is the best teacher, which broker is the best teacher? I don't understand that question. Broker doesn't teach. Okay, so you mean best broker you wanted to say. I think you want. There's no, I use quite a few brokers. Okay, there is no such thing as best broker, but you can choose a broker. If you look at Google, you can find a lot of good review, but it depends on which one you rely, right? It's the broker choice is up to you, but I traded quite a few brokers in most of them I traded as Australian broker. Currently I'm trading on Vantage, and before I traded quite a few of them, TMGM I think, and also I traded with IC Market, TMGM, mostly Evertrade quite a few long I traded. Still I trade on Evertrade. I have quite a few brokerage account, because if you look at, I believe in diversing, because I don't want to put all my egg in one basket, right? So even if it is a broker, if I have one account that I'm relying on solely on that account, right? So I use multiple brokerage so that I can have understanding of which one is giving best, which one is, sometimes one broker has a best offer, the other doesn't have. So I can, switch my capital to giving the best one. Currently, I'm trading on Vantage. If you guys, I think you can find the link in the description. I'm not sure it's there or no. Let me see. Where's that? I think there is no link in the description, but I can provide one anyway. So for those who are in the academy, you can get a link, share the link. Okay, I'm sharing in the description of this video, and also I'm sharing here. Let me bring that up. So currently also bonus offer available with our link, so you can have that bonus as well depending on your geography. Usually 50 to almost nearly 80% bonus depending on where you are at. So let me share that one here. Okay. All right. All right, so it's on the description, and also I'm sharing here on the chat. All right, so now let's look at what's happening on XAUUSD at the moment. We can see that gold, if you look at the bigger picture here from the earlier that we have seen, there was a drop here. The market now slowly trying to push that price back to the upside here in that area, right? So with that movement, if you look at here, that the market slowly building its momentum back to the upside here in that area. So if we look at here, that with this bounce, expecting the gold to potentially bounce back to the upside here. So looking at here on the lower time frame, that with this move now, what I think, if you look at this, is a potentially a reversal call. Do you think so? Because if you guys look at it here from here, this is a drop back to this support from that high, right? And then the market dropped again to that low and got a rejection. So it has broken out of the trend line here. Because if you look at here, you can see it has broken out of that trend line. Okay, so with that being said, this is a trend line. The market has dropped that below to that support, and with that break below, there is a rejection back to the upside here in that market. And that is where, if you look at with this break above, it's now on a pullback, but I think that the market may eventually bounce back to the upside here of this level. So this might form a potential and inverted head and shoulder. Today, I discussed also that there is a higher volatility now at the moment. So therefore, stop loss also need to be little potentially bigger, because if you look at here, you can see the 5 minutes ATR now here is 162 pip, currently at 106, 107 pip on 5 minutes time frame, which is quite a high. So that, looking at it, if we look at the 1 minute chart here, in this 1 minute chart, this is a trend line, and with the trend line here, with a significant bounce of this support, which is a clean break back to the upside here in that market. Now, this move that you can see, this is the 1 minute strong impulse to the upside here in that area. And that impulse, if you look at that 1 minute impulse, is a clean breakout. And with that clean breakout, if you look at, this is a clean move, and with that one clean move, this is a previous resistance, which is turning support here. They're expecting the market to respect that key level and then to give us an entry. Currently, if you look at this drop, this is already a breakout structure, but I would like to see that. I think we might see a potential retest of that. There might be a reaction of this level back to the upside here, and looks to me bullish. Do you think so? Getting ready for an entry? I would like to say how many of you ready for an entry, which broker? Okay, waiting for it to come down to buy. That's a good idea. Always wait for the pullback. Now, 30 minutes price action, this is a bullish engulfer. And I would like to keep, if we enter, I know it's going to be crazy high, the stop loss. So risk management is key, but still not entering, guys. I'm waiting. But I think there is a potential for a bounce, because the market had left significant imbalance in that area. And if the price goes up here, currently there is a huge volatility. So expecting nearly to 500, 600 pip move possible, 300, 400 pip upside here possible here. So the key here is to look to keep the risk managed, guys. If you don't know how to manage the risk, then I wouldn't recommend you to enter the trade. All right. So risk management is key. This is where the strength is. This is where we make money, right? By managing the risk, so that the trade that we are opening, we can take highest profit. Now, the 30 minutes candle, the 15 minutes candle closing as a narrow doji, if you look at, and this doji having a long wick at the bottom, that can be taken by 4393, 4393, come on, 5493, it's too low. I didn't enter so early, but here we can see the market. This is already has broken out of the trend line, but I would wait for a little deeper retest of this support here, guys. The market testing the 5504 is a very, very important level, but I think the market might trouble back, but if we enter, it's gonna be a little earlier. If you look at this is order block. If you look at the 5-minute chart, this is an order block, right? And with this order block, $5504 is a good level for entry. 5500 is a good enter. Okay, it's pushing that back above here. Well, this is an order block here, and with this order block, the market slowly moving its pressure back to the upside. If you look at, and it bounced effectively back to the upside. Okay, entirely showing a stronger bullish momentum back to the upside here, and okay, so the recent low is here, and would like to see that it's coming for a break of structure. So the current support level, we are looking at 5508 level. Now the previous trade that we have opened, also in the same way, if you guys looked at here, we have opened our first trade earlier in London session of this level, and we were waiting for the here, and Okay, so with a long week candlestick pattern, the market is coming for a pullback here, and with that pullback, the price now approaching that support here, and that support that you can see the market as this is a 550 is a key support level that expecting the market to drop down here to retest and then to return again back up here to create a new higher high in this market. So 5508 is key support level, and we might see the market to respect that key support level at 5508 or even lower, and to potentially bounce off this level to the key level 5587. Do you think that it's gonna be a good idea to look at that entry? I think so, because the market is, if you look at this, is the first break of structure and it's still maintaining that uptrend. So yeah, so it's maintaining this upside bias with a break of this trend line, and I would like to start a pull here for this entry. The market trend is, if you look at the 4 hour, so the 4 hour candle close and the market slowly pushing that back to the upside, and there's a higher chance of reaching there before even it coming back below here. Okay, so I think 290p move is high probable. Do you think 5556? I'm posting a poll quickly. If you guys, do you think gold is going to reach there? $5,556.26. Okay, so it's still maintaining that uptrend, and I have just started pull. Let's see what most of the traders are thinking, and then we'll be looking at entry. This is an uptrend now at the moment. We would like to see one swing low to be broken, guys, before we look at that entry. It's maintaining that uptrend here, and hello trader, welcome. And Okay, so you see that breakup structure is coming here, and with that breakup structure the market is slowly pushing down here, and with that break below that, expecting the market now, if you look at here, it's pushing that below. And this, if you look at, this is 15 minutes candlestick, and I think with this candle close we can expect a potential move here. With proper risk management, that I'm going to look at this market structure here to create a new higher high. And so breakup structure, and (30 minutes) candle closing, and also the 1 hour price action closing as a bullish. So I'm preparing for a potential entry here with we need to have a bigger stop loss, guys, because the market is significantly volatile. I'm still not entering, but if your account is small, then definitely risk management is key, to look at that you are not over risking or over leveraging. Okay, so you might see some pullback here, and okay, looking at here, let it drop first. 1 hour chart candle close, and with this drop, guys, I'm going to go long. Keep in mind that we have a wider stop loss, so that's gonna be a bit of wider, so it's 146 pip. So it's very essential that as you do the risk management, that means doing proper lot sizing based on your equity. It's essential to make sure that you are not over risking or over leveraging. So it's 146 to 48 pip stop loss here on XAUUSD, and with stop loss looking at 5505.75, and TP target setting at 5554.89. So placed a buy here, and I'm also sharing the same trade in the premium. long on gold and waiting for a potential break back to the upside here. There is a potential for deeper pullback. If it does, we have done the risk management here, and the key here is to look for that the market to give us that potential upside bias. And in the meantime, guys, if you're enjoying the live session, check the news. Yes, there is coming up news in 1.5 hours still remaining. So I have few questions that ask 5600 is good to enter. You have entered. Nowadays, gold doesn't follow the technical pullback. Of course, it follows. There's no instrument you can find that doesn't follow the technical pullback or the technical trend. Neither you can find anything that doesn't follow the fundamental. So both is always driving the market. Understanding the technical and fundamental making a difference isn't important, right? If you look at that, let's say this is XAUUSD, which is creating a pullback. Now, pullback, let me give you an analogy that will clarify you. So what is the fundamental and what is the pull, like the technical? Let's say you are in a city, new city, okay? You landed on the airport and you got your car. So once you got in your car, you get in the car. All right. Now you need to go to a destination, right? So you need to go to potentially another city. So let's say this is your city A. This is your city B, right? So the fundamental is the city. That means, let's say there is a city here, city C. Okay, and there's a city here, city D. All right. Now, fundamental means that which city you are going to go. That's the directional bias. That is fundamental. For example, if the rate cut, then you will go to city C. If the rate hike, you go to city D, right? So city C is upper. City D is lower. So basically the policies is giving you a directional bias, not the technical factors. Now once you decided that which city you're gonna go, either going to C or D or B, based on the fundamental you decide which city you're gonna landing. If you decide to land on C, now the route that you will be following is technical. You got my point? So either you go to city B, A, C, D, you need a route, and that route is technical. So if you look at, let's say you're gonna go to the city C from A, you may go like this. If you wanna go to city D, you may go like this. The road is too bumpy. If you wanna go to city B, you may go like this. So the route is different because it's technical. Now, the natural rhythm of the market is, and if you look at a tire in the car, that there is a natural rhythm to it, right? It's gonna rotate. Everything has a rhythm. Left, right. Effort and then retreat. Effort and then retreat. Okay, that's how even everything in this nature operates in the same way. An effort and then retreat. If you look at the human emotion also operate in the same way. Do you have the same kind of emotion every single day? No. Someday you will have a lot of energy, and then you put an effort, and then you have to retreat and pull back to have more energy and again to get going. Day and night, there is also season, there is a rhythm in it. Everything has a rhythm. In the economy also, there is a growth and a retreat, growth and retreat. The key here is that everything that you look has a cycle in it, a rhythm in it, and more often you'll see those are non-linear. That means that they follow a certain algorithm, right? If you look at the weather, also it's the same. So therefore, the technical is a pullback. That means if you want to go from A to B, you need to go and then pull back. You need to go and then pull back, and eventually you're gonna go to the B. Now the trader, the difference between the trader and investor is that investor usually buy at A and wait for going to B. That's the investing, right? That's based on purely fundamental. But the trader, they need both, because you need to know that which direction the market is heading, and then you need to know when the market is on a pullback so that you can enter. It's kind of the car is going, and then you need to wait in the station to get in the car or the truck or the bus to ride the trend. So the station is where the pullback, right? If you look at the ship, then you will see the ship pull back, right, with a big long anchor, same way. All right, now we are on the trade and looking at some. Can we break the 5600 tonight? Let's look at if we can break it. $5,600. It's pretty high. Possible, because already a daily high, if you look at the daily high, is at 5597. Absolutely, like absolutely means doesn't guarantee, but high probability. Okay, always guys think in terms of probability in trading, which is another significantly important concept to understand as a trader. Always look at from the probabilistic perspective how the market moves. Everything is probability, in fact, right? It's getting that bounce off this level, and we might see that continuation here to create a new higher high, and we might see that bounce back above to create a new higher high. Looking at that level here, the market structure here is still bullish showing up, and I think the price may eventually continue to rise here back above to create a new higher high. How can we have a middleman on 4-hour time frame but could drop? Okay, so the 4-hour, if we look at, no, that's not a middleman. If you look at the high, it couldn't break the previous high. middleman is considered usually when you see the market has broken out of a certain structure. So if I give you an example, that the perfect example of middleman is when, let's say you see a structure, right, like this, any kind of consolidation or a pullback, and the market broken out of that pullback with a middleman, that's what we need to consider. That's a middleman. That means it's a middleman between a next move to the previous consolidation. Now look at that here in those areas, how you can relate that. So you will find plenty of examples of that when the market breaks out of the consolidation. Look at this one here. This is a perfect example. Okay. There's a move and then pullback. Okay. So it is a red candle. It created a structure. If you look at the lower time frame, you can find this structure. And one candle, one middleman broken out of that structure, and the market has shoot back to the upside here. Now you can find a similar kind of candlestick pattern over and over again. Look at this one here. The next one, bigger one, structure. The market has broken out of the structure of this using this middleman. Now similar way. Okay, we see that the market is heading back to the direction. That's a massive move, guys. I'm up 171 pip, and I see like it's not going up. That's cool. Wanna take it? I think it might come down for a pullback. I'm out. I'm out. 160 pip. Will we re-entering again? That's good. $5.94, should I close it? I'm not sure which strategy I have used, but the one that you have opened, I have closed 160 pip. How many of you have on this trade, guys? Here in the live session. Ready for another one? How much did I make? Okay, so let me tell you how much did I make. I opened 0.48 lot and 688 that I closed it. You can share your in the live chat. You don't have to do exact PNL, but by number. Nice trade. Yes, absolutely. Thanks for confirmation. Now join the Telegram. I had few members on board yesterday on the premium. At the moment, we have few spots to take on to test our strategies. We have running strategy currently also in an automated system as well. Along with the strategy, many of our strategy now fully automated as well. So I'm sharing the free Telegram link. You can join there on the free Telegram and stay there, because at any point you could see that promotion being sent on the free Telegram to join the premium whenever it opens for anyone to join. And I'm sure that for those who join, definitely enjoying. It's an incredible academy here, guys. We have the full student dashboard where you can access every bit of knowledge that I had in this whole of my trading career. One of the misconcept that I have seen trader has about fundamental. I have only 2 simple slide that I have explained the fundamental. That's enough for you guys. You can go to that and see how it works, because the market is basically governed by few simple factors. If you know that, you can know why the market is moving, why the direction is in that direction. Now today's focus, we had WTI. You can see that it's crashing back to the upside, right? If you apply that fundamental that I have explained in the academy, in the student dashboard, though, it is now 95% of joining. So you can look at the below the website. It's nothing in comparison with the value that it brings for you. Now with the fundamental, if you look at that I have discussed about the WTI. Okay, now why does WTI is rising in price? Let's understand it. You can understand it from the fundamental. Very simple. Good morning. How often do you come on? Every single day in this time on the live session. We do have premium group where I am also regularly sending every trade that I am opening with, detailed explanation of each trade with the strategy as well as the trading tools that we have. Now let's look at understand about the WTI. We will be going back to gold again. Now WTI, if you look at, this is by the way, if you look at the 1 hour chart, this is the trade engine entry using the WTI. I did not enter because WTI was waiting for a bigger trend. But if you look at that engine, how it worked when the market trend, that you can see that they are absolutely in that direction. Now with that movement, if you look at the WTI is now in a bullish trend. Now according to our trade entry engine, if you look at, this is an indicator. Also the strategy directly generate the trade alert on TradingView, including stop loss and take profit target. Now if you look at the lower time frame, price action on WTI is bullish, the technically, but the fundamental here, fundamental factor that you can look at in that area here is that the market is in a trend and it's pushing back to the upside here, right? Now with that trend, if you look at how that US oil now, that means that crude oil is pushing back to the upside here. Now looking at the technical, we see that it's a clean uptrend. But however, if we look at the fundamental, right? Look at the fundamental here. Let's go to that. What is the most important fundamental that potentially showing significant volatility in the market? Some of the factors. So there are many things that, if you look at currently approaching that on, especially if you look at the oil price, right? It's significantly pushing back to the upside. Now with the increase of oil price, if you look at the past influence, now we'll go back to the gold again. We'll be looking for the next entry. While this is where, if you look at here, okay, with this support, there was a negative drop here on WTI. I've looked, I traded during the time period. It went to the negative, okay, I remember. And then the market picked up off this to the all-time high, nearly to here, all right, $126 per barrel. And then the market trend so far, and now with this double bottom, what we are seeing that the market had shifted again to a bull market so far. Now if you look at the past few months movement on WTI, it's dropped to this level, and the price is now again, after creating such a low move here, breaking back to the upside. Now oil price rises for a reason, guys. Keep in mind that whenever oil price rising, there is a reason, and that reason could be even unreasonable. So now if you look at here, with this more pullback, the market is heading. What I think that oil in this movement could bounce potentially back above here to create a new higher high. So to enter the oil trade to enter WTI trade here, we are looking at this market to continue to trend, and that's a significantly bullish trend here that you can see. And with that trend, any breakout structure here that we can look at entry on WTI. All right, now looking at with the WTI, going back to XAUUSD for another entry here. All right, so now gold just made 30 minutes middleman. Okay, 30 minutes one, yeah, this one, the previous one, that kind of candlestick pattern that we talk about, that is what we are talking about, guys. This is one, the perfect one. Okay, because that one had a breakout. So when you consider the middleman, what you need to look at, the one leg or hand has to be with the structure, the other one breaking out of it. So there's a bridge between the conscious and unconscious, right? That's the bridge between the breakout and the out of the structure. Now if you look at that level here, okay, so lower time frame 30 minutes, where the support and the resistance, the market has entirely broken out of the structure and moved back above here. This is a 30-minute middleman. And if you look at this, when you can identify that in the right time, it's gonna take you to the next level as a trader, which is very important to look at. Okay, so it's still heading in that direction, and we are looking at now for deeper pullback. It's still moving, and now let's understand that the concept, or the, what you can say, logic or reason behind the trade. I would say, guys, more of a reason rather than the logic behind the trade. Okay, always say the reason behind the trade, not the logic. There is a difference between reason and logic. So reason is why the trade that I have taken is the way I have taken. That's the reason. Now, the trade that we have opened, how many components in it? 4 components. Guys, keep in mind, as I mentioned yesterday as well, becoming a level 4 trader. This is here, level 4 trader. Becoming a level 4 trader means that you have the knowledge about the technical, you have knowledge about the fundamental, you have knowledge about psychology, and also you have knowledge about the timing. Now, when I have entered this trade, the back of my mind, because what I'm discussing cannot be back tested. You can't back test the timing. Can you catch the time? You can't, right? We look at the clock and we say that this is the time, but it's not the time. Have you ever experienced any past or any future? That's an illusion, right? So therefore, if you look at the 1 hour candlestick pattern, this 1 hour candle closed, if you go back to this live a little bit past, and you will see that as soon as the candle closed, just few minutes, few seconds later, I have opened the position. That's the timing that you cannot backtest. Okay, now and if you look at that level when the candle 1 hour candle closed of this support, and how do you also the technical perspective that you can use here for that entry. Now looking at the technical, if you look at this is, look at these 2 legs or the arms, whatever you want to say, and see the breakup structures. These are the detail, the attention to detail before entry. Because when you look at the market is breaking out in such a stronger momentum. So what is momentum? Momentum is mass multiplication of the distance, right? Is the momentum? What is the equation for momentum? Yeah, velocity. Okay, so this is the momentum if you look at, and with that, with a bigger move, it has a significant momentum, and that has given you the further confirmation for a bigger move in one direction here in that market, and it is still going in that. And this is also another way of understanding the psychology of the trader, because everyone looking at the same chart but interpreting differently, right? This is how everything works. Everyone look at the same thing but interpret differently. will the news keep the uptrend continue? I think so. Is it possible to join the premium group with a funded account? You can join with funded account or without funded account. The purpose of premium group is education, right? Where you can learn and grow as a trader. Okay. So trading is, I'm not a broker, so you can, whatever you can do that. My goal here is to give you what knowledge I have gained as a trader so that you can become a trader. Okay, trading is a skill set. And our goal here is to train the members to gain that skill set. Trading account is yours. Okay, you have to, either you can have or you don't have. It's not very important. The importance here is you have the skill set, you understand the chart, you understand the market, and then you can become a trader. How far can this middleman make this price go up? But just keep in mind that, guys, when you are trading, make sure that you're not buying a funded account and just blowing it up, right? Because the system that I'm trading now, I even can trade on a lower time frame and can remain in a smaller capital and can remain profitable over the long term. Okay. So with this trend line here, you can see the market is 5600 plus in NY session. Once the market is heading towards that direction, right? This is the today's high here at nearly to 559697, and with the upcoming, if you look at coming up unemployment claims right here, so unemployment claims coming in less than an hour, right? And with the unemployment claims, if the market shoot up back to the upside, it might just cross that high and eventually break that high to create a new higher high. So this is what the key here to look at. Now at the moment, if you look at the market is trending, and because it's trending, maintaining this uptrend, creating series of higher high and higher low. The potential here for the market to eventually break that high and create a new higher high is higher. What indicators are you using? Okay, so the indicator, this is the invite only indicator. So if you look at, this is when the market trends. So this indicator is providing directly the trade alert generated on TradingView with entry, stop loss, and take profit must be used with proper risk management. That this indicator is one of my strategy now directly translated into the Pine script to generate the alert directly of that Pine script. Now, many of the members of the academy have got access to the indicator. If you are using, then I would recommend to use above 5 minutes. For 1 minute, currently it's under development too. This is on auto trading also available. So with auto trading, risk is fully managed. So you can use the indicator to manually enter the trade, and also you can set alert on your TradingView to give you directly trade alert of this indicator. When it generates the trade alert, you can be notified on the push notification button or on your email. But if you're using on 1 minute, then I highly encourage you not to use that alert system, because it's going to give you a lot of trade alert that you cannot take. So in that case, you can use a specific window that I do, that for example, before the London session open, you can turn it on and wait for the notification and then enter. But with 1 minute, it's very fast timing. So that's why I use on 1 minute auto trading. So in auto trading, I don't have to do anything. It just do it for me because I manage the risk accordingly. Right? This is what it is. But if you are using, guys, manually, then you need to use little higher time frame. Use the 15 minutes, at least on 5 minutes like this. When you see the trade alert, make sure you do the lot sizing, risk management, because if you are not using the auto trading, then risk, you have to manage it yourself. Because if you don't manage risk, no strategy, nothing will work in this world. So therefore, the key here is to do the risk management. Keep the risk low. If your account size is bigger, then you may keep 0.25% risk or even 0.1% risk if your account is 100k, like that. If your account is smaller, not more than 1% per trade, like that. Once you keep the risk managed, this strategy works because it's a proven backtested strategy. But you must do the risk management, lot sizing accordingly to work it for you. But if you are not sure how to do that, then auto trading is best, because in auto trading, it's fully done. Guys, smart money trades like that. Smart money doesn't trade now like we do, but learning is important. If you don't learn manually the way we are trading this live session, then you're not gonna learn. It's a next level trading in auto trading. But the level 1, level 2 trading is the foundation, where you learn the strategy that you are trading in the live session, because you need to learn first. Anything you want to do with the tool, first you need to learn how to do it manually. Okay, so either you are using a 200k account or 400k or even $1 million account. Risk is in percentage. Okay, this is a mistake that many traders make. Every strategy that I use in my auto trading, I set risk by percentage. Okay, I set risk by percentage. So you need to use a risk calculator percentage for a 200k account, right? How much you want to risk per trade? Okay, the risk percentage depends on many factors. Let me tell you, if you are using a higher risk reward strategy, for example, if you are using a strategy that your risk is, let's say you want to risk $100 and you want to gain $500, that means 1:5, then for a $200k account, I wouldn't risk more than 0.1% at any point if I'm using 5:1 risk reward. All right, now if I'm using 2:1 reward to risk, the strategy is proven for 2:1, then I wouldn't go for a 200k account for more than 0.2% risk. Like this. Okay, that's how you can determine your risk setup. Depending on what kind of strategy you're using, what is your risk reward, and are you hedging? We have strategy that I hedge. Okay, hedging gives me really great value. Now this hedging is exclusively available for the academy members. If you're in the academy now, it's very easy to join. We have a strategy that we are using, hedging. Hedging helps us to eliminate a lot of stop losses directly hit and going. Instead, we are using to hedge so that we can increase our win rate. Alright, so XAUUSD, you can see the market is now pushing back down. It might now come down for a deeper pullback or may bounce off this level. buy again now, waiting of that. We see some reaction of this support, but at the moment if you look at of this support, the market slowly breaking back to the upside here in that area, and that could take that market eventually back to the upside here. And with a break of support, the market may eventually continue to rise here. This is an interesting price action, guys. I'm just looking at the multiple time frame. It created an inverted head and shoulder that might eventually break to the upside here in that area. Ah, come on. Let's have a quick. Coming up in few minutes, we will be looking at the upcoming unemployment claims, and I'm looking forward to enter again with a bigger peep. By the way, how many of you have enjoyed the previous trade or have taken the previous one? And in the meantime, actually join also the Telegram. Though it is a free Telegram, there is a lot of values that I do share: pre-London session analysis, post-London session analysis, and many other education, instant market update, regular every update that I'm posting is there. That if you want to be a profitable trader, this is the best place that you can take your trading to the next level. I have shared in a group that premium, so you can join the free Telegram. For those who have joined the academy, make sure you keep also check your email for all the updates. We have the premium signal and education group on Telegram where I'm sharing every updates and trades that I'm opening every single day in the academy. Now going back to the fundamental, as coming up in, you'll see that coming in just a matter of 30 minutes, unemployment claims. This is a big news, in fact. So how can we trade that data? Also important, right? How does that upcoming data will have an influence in the market? Let's understand the fundamental. It's not a big deal. It's a simple understanding of the fundamental, right? Okay, so now looking at fundamental with the unemployment claims coming up, how can we expect this data to influence the market? Dropping the music a little bit. Okay, now going to the fundamental, right? With the data coming in less than 30 minutes. More than 30 minutes, in fact. We have 5 minutes for this hour to go. Now, with the unemployment claims, if we look at, always ask the very foundational question that will give you overall, because everything has a premises, everything has a ground to it. So if you ask this question, what the data tells about the economy, what the data tells about the currency, the simple, right? Now this information, I really don't see any usual effect, especially here. It's always say the same thing, actual less than forecast goods for currency, but I don't see that way. Okay, it actually doesn't reflect the actual implication in the currency. Why? Because if this is an actual less than forecast good for currency, I don't see. It's mostly related to growth and inflation. These are the indicators, because those factors, you see how this data is being interpreted. This data is analyzed by Fed, right? Based on those data, Fed decide either to cut rate or hold rate. And they are contributor to the policy making. And that's where the market really moves based on that. So if you look at that, unemployment claims is less, for example. What does that mean? More employed, right? Less people claiming unemployment, that means more people employed. Now, everything has the two sides to it, keep in mind, guys. So when there are more people employed, there are more job growth, right? So these are the primary factors for the job growth. Now, how that all those combined information will go to the rate cut or rate hold, that's your ultimate destination of this. Now, how does this data coming will have the effect in the market? It will have an effect which is what the market due for. For those data, the market wait to be due. For example, this market is a bull market. And the market is waiting. If you look at this consolidation here, is waiting for those data. You'll see that either unemployment, if you see that there is a less unemployment claims, will solidify higher job growth. That's how it has been interpreted. Like over time, if you look at the past, some of the data, let's go back here. So you see that core CPI, CPI, CPI. Here there was a low data on CPI, and then PPI came to be retail sales came to be higher. GDP on this is on GBP on dollar. Here unemployment claims came to be significantly lower, right, from the forecast on 16th of January, which is nearly 10 days ago. How does the DXY trend it? If you look at the 10 days, if you look at the weekly, so both of these weeks there was a bearish move, right? So if you look at this data that released on 16th of January 2026, if you go for actual less than forecast is good for currency, then DXY should be bullish, but instead it's gonna be bearish, right? So the data is basically, they give indication to the central bank about how they should set the ultimate policy for the rate decision, and which is the primary directional bias in the market. Now at the moment we can see that gold is trading, right, in a bullish trend, and which is unusually bullish, is not only the rate but also the current geopolitical phenomena, because the market is highly reactive to the news, especially gold and WTI. So you can see that WTI also in a bullish, gold also bullish. Can you tell me why the gold and WTI, both of this, highly sensitive to the news and any breaking news, anything that significantly influence? And also there is something also come up. You will see that at some point might not be infinitely going up. When it will break down, you will see that there could be significant breakdown. But at the moment we are seeing that upside, and we are looking at this, and there is no, so far it's a topless pit, right? Have you ever seen a topless pit? You have heard of bottomless pit? It's a topless pit at the moment, so you can look at that so far pushing back to the upside here. Okay, next entry. We are waiting another news to come up. So I'd like to delete the structure because the market has had a significant change in the market structure. And now with the data, this is the 1 hour. There might be now again pullback, and the imbalance is to the upside, so the possibility the longer term is up, but I'm still waiting for clear confirmation for another move. So you can enter if needed here for this bounce back to the upside here. Okay, so with this crossover of this 10 and 20 exponential moving average on the 5-minute chart, that you can see the market now is in this initial move that you can see, and with that initial breakout that you can see with a series of higher high and higher low, this is the current order block. And in that order block, expecting that the market to eventually break above here to create a new higher high. $5600 soon. With the upcoming data, the market, if you look at here, it has left this zone unchecked. Now the bias back to the upside is very high, but at the moment before the data, I would say that if the market breaks below of this support, is a very high probability setup. Okay, because without breaking below, if we look at the market to go up, which can go, but there might be a spike again to fill that zone, potentially to even creating an inverted head and shoulder, and then to trend back to the upside. Therefore, without breaking below, entering could be that spike come back down and taking you out of the trade. So here I'm looking at, guys, that potential break below, as with the upcoming data the market might deepen further here, and with that deepening back below, giving a higher possibility for the market to potentially reverse again back above here. Okay, so with that break, that you can see the market is approaching that lower shadow, which is coming down here back below to the support, and that break is significant. As I mentioned, the price now may come down for a deeper pullback, and before the news, this breakdown that we can see can give further entry opportunity here in this market now, as the market coming for this pullback can create a significant momentum back above, maintaining an inverted head and shoulder here in that market. Okay, now with a large curved consolidation pattern here, I think guys, before the news, we might see the spike. So I would like to also start a pool to see that, with the previous pool, have you cast a vote? 556. It was bullish, and the vote really 57 vote, and that came out to be absolutely amazing. If you guys look at the previous poll that we have posted, gold is going to reach 5556, 91% yes, and we took the trade. We secured profit, though still didn't reach that far, but when we started the pool, the market was here. I think we entered in that level. So from that level that we started the pool, moved almost 210 pip. Well done. Now we'll be starting another pool here, right, with the news. Now interestingly enough, if you look at, go back some of our previous live session, the pool most of the time which has come above 50% what the most trader thought, it came out to be true. This is the interesting fact. So I am starting another pool about the upcoming news. Okay, so we are looking at the unemployment claims coming in just a few hours. So what's your bias on unemployment claim? So in terms of gold, okay, I posted to a poll here to find out that what majority of the thing. You can cast a vote and we'll see from there. Before the news, you will be ending the poll, so you have few minutes to cast that vote. Just quickly cast, guys, everyone. So before the news, based on that, we will be seeing that how this poll coming out to be true. So you have around less than 13 minutes to cast a vote, so you can just quickly cast a vote, and then we will be ending the poll 2 to 3 minutes earlier to see that how much probability that this poll is coming with the vote. So I see that so far bullish 88%. Okay, I'm not releasing the results beforehand. You can cast which way you think, but once it is done, I'm going to end the poll, not end the session, in the poll, and then we'll see that what the results, and based on that we can look at that. Is it safe? Can we buy gold now? Two questions. Is it safe? And can we buy gold now? So we are looking at, first of all, for the data to come up to find an entry. But, I don't think if you do the risk management, it's going to be unsafe. Unless you are not trading in the news. Okay, if you are trading inside the news, that's not going to be safe. Okay, because trading inside the news can cause sometimes big loss. So be very, very cautious about the news when you are trading, which is very important to look at. Here you can see that there is a break. The market is slowly coming down here, and that pullback, if you guys looked at, was essential. Now with this pullback, we are looking to see that the market is eventually coming further down here and expecting it to break that low to this support level before it creates any move any other direction. I think guys, this move that you can see, this is the recent level of swing low support, and breaking below with the upcoming news may get a spike and potentially bounce back. Now this is the primary understanding. I see that some boat going to be bullish, going to be bearish. If you haven't cast boat yet, you can do that to know that what majority of the traders are thinking, and based on that boat you will be ending this pull to see that where it is going in fact. So of this support, if you look at the previous swing low, this is a previous liquidity zone, and of that support the market started to reverse, that you can see, and that might take the price back above here potentially to create a new higher high. So if you look at from this support, this is an initial move, and we may see the market eventually to remain here potentially upside with another impulse back above, and that is where the market may eventually create a new higher high. We have 6 minutes to go for the news to come up, and I'm looking at in that area. If you look at here, it tested this key support level, getting the rejection. That means there is a higher chance for an upside bias, but at the same time we have to keep open that the market may spike for deeper liquidity grab, because liquidity is the fuel of the market, right? When the market grabs liquidity, you can think of that the market is basically preparing for a bigger move. Now you can see so far, if you look at this 5 minutes price action, if there is no news, I would look for potential buy entry here. But there might be a spike because this price action that we can see has a component of liquidity, right? And understanding liquidity will give you better understanding of why the market moves the way it moves. As I mentioned earlier, guys, always ask question. Intellectual curiosity makes better trader. That's according to the research. So if you want to be successful as a trader, the first thing that be more curious. Now that means if you look at a trend that has broken out of the structure, where the market again moves, make a bigger move in that direction of the trend, right? So let's understand it. The driver of the market, why the market goes up. So the market goes up when the buyers buy. The market goes down when the buyers sell. So that means when there is a more buying pressure, the market will go up. When there is a more selling pressure, the market will go down. That's the simple formula. Now, so the for buyers to buy, you can't buy just directly buy, because it's not, the market is not like a pond that you can grab some water. For the buyers to buy, there has to be a seller on the other side, right? So that means when the equal number of buyers and the equal number of seller, no matter how large the volume is, if both are same, the market will not move. That's interesting. There has to be a deficit in terms of their buying and selling. Then the market will create that imbalance, that deficit for the market to go up, to show that level of deficit from its true intrinsic value. You see that every asset that you will buy, also there is a true intrinsic value, which is the ground of each asset or instrument that you are looking at. That means the base value. So now, if you look at that, there is a deficit. That means more buyer than seller, the market will go up, because this is how the supply and demand works. And so smart money, that means that the hedge fund, institutional trader, the large institution who has the biggest volume in the market, are primarily moves the market, because when they buy, the market will go up. No one can tell you not to buy. Everyone has the right to buy, so, or sell. Now, once you buy, someone else need to take on the other side the order, right? And that's where the liquidity gap happens, because if you look at below this level, here a large number of volume, that means the stop loss. That means those who bought, like with us, we bought off this level. Below this level, their stop loss. So the buyer's stop loss is a sell order, and that sell order, that means when there is a sell order, the institutional trader bought off those order, and the market moved from that level onward to the upside. Now, as a retail trader, we need to look at that liquidity gap so that you can take the flow, the directional bias with the flow, and that's how you can keep trading like a smart money, but being a retail trader. We have the data coming up, and I'm ending the pool to see what the results shows. 71% said gold is going to be bullish. Let's look at the data. Where's the data? Unemployment claims 209k. Forecast was 206k, little higher than expected. How does that has impacted? You see the market is, we can look at the DXY. Okay. This is a support level here on this area, and with this support from the monthly, weekly and daily price action, we can see there is a support level, and with the support from the 4-hour and the lower time frame, we can see the market had created this triangular pattern from the 4-hour and the lower time frame on DXY. And with this movement that you can see, with this triangular pattern here, has created a structure that might breaking back to the upside here on this market. So if we look at the DXY price action here, didn't move much with the news data that you can see. Now if you look at the gold, this is the breakout structure, and with a series of lower high, I think there is, if you look at here, it's getting a rejection of this support. Now looking at cautiously entering is the key. From the 4-hour chart here, that you can see this is still bullish, and coming to this intraday support is high probable. Now if the market coming to that intraday support, there is a middleman formation here that if we look at, but that might drive that price to this fair value gap. This is a bullish fair value gap if you look at on 30 minutes time frame. So the market had a higher chance for a rejection of this support level now, and we will be looking at entry again as soon as the market reach that intraday support here, right? So it might cross this low, and also there's a 4-hour low that the market might come back further down here and could reverse back again of this level. Market is maintaining that downtrend, which is showing up to be here to the support level. So we see that the market is approaching that 4-hour support. There might be a higher possibility for a rejection of this level here. Ready for another potential entry, and I think the market might react off this. This is a key support, and we look at the 4-hour here. So far, the price has tested that low, and 5-minute candle closed. So it's gonna be, if we look at this potential entry, this is the higher volatility. Stop loss might be a bit higher, but I think there is a possibility for the market to go back to this 5540. Market structure showing significant rejection of this key support level. I'm looking gold to potentially 5540. What do you think? Share your thought quickly. We might be, but I think it's gonna bounce off the 5540. And yeah, this is the key support. Good. Okay, this is a clean move back to the upside that you can see. And I'm going to see a pullback here. It's pushing with a one single momentum, showing a bullish entry here, but I would like to look at that pullback. So there is some kind of news. Gold takes, gold trade more like Okay, so there are some news, but if we look at the calendar wise for the unemployment claims has got a little higher. Now gold has now in a pullback again, so that pullback, if you look at here, now with this pullback, what you can see, the market may push that back again. Okay, so now it's on a pullback. With this movement, I'm looking for possible entry if we see that proper confirmation of this move back here. Of this support, a chance for, if you look at the 1 hour, see, if you look at this is the 1 hour price action, and I want to keep it within the range. If we look at that entry, expecting it to drop down to, it will be a very good entry if we see the market has tested this 4 hour support again. Okay, so it's approaching that intraday, that means the 4 hour support, which could lead that market well below here, and okay, this drop is essential that so that you can look for buy of this support, and dropping like that, if you look at this one kind of A-shaped movement that you can see here from this support to this high, coming back below here, can give potentially upside bias here, and okay, so I'm going to open buy here of this level. Stop loss will below the session's low here, which is gonna be little higher stop loss, but to keep it reasonably managed. Of course, risk management is key. And looking at here, because we are almost nearing to the end of the session, we'll be looking at the first single move back to the upside for taking profit as soon as it appears. Here I'm putting the stop loss. So risk management is key here, guys. 5497.92 and take profit. First take 5542. And this is a potentially an upside movement. Do you had a big trade earlier? Okay, initial bounce that you can see here. This trade I may not hold very long. You want to see that initial breakout. Well, looks to be stronger here, guys. This is significant here in that area. There's before the candle close. Okay, so here waiting for that pullback. 1 hour close coming in 2 minutes. Okay, it's almost to the order block. And I think buying pressure potentially to appear. Okay, awesome. So you can see some upside bias, and with the candle close from the 1 hour, and okay, this trade, as soon as it is gonna cross this high, going to our profit area, we do another move back to the upside, will be going out with the running profit. Currently nearly at my entry, still not there, because the market might come down for a deeper pullback, but I would like to go out with this one as soon as it shows enough profitability. There's an order block, and there's a higher chance for break back to the upside. Let's wait to see. See some upside bias. You want to see that the market going potentially here, breaking 5530, could possible. Potentially break that high, and with the 4 hour candle close here, if we look at, as the data has released to E, this is what I'm expecting, that the market might be having that bias back here above. Okay, I'm on it. Alright guys, as soon as I will be exiting, I will also letting you know here how I'm managing, and I think that I'm expecting it to break back up. Now the market in a interesting level, but this price action, I think there's a chance for breaking in both direction. Okay, I'm on the buy side. It's pushing that up again, and just wanna see, wanna wait. Okay, here created enough momentum potentially to cross this high. Second trade. Don't you think NY will also take profit today? You mean NY will session the market to sell off? We see that there is, if you look at here, the market is still showing bullish momentum, and you absolutely don't know when it will start profit taking, because if you look at that current geopolitical situation is not for any profit taking. The market might remain sideways, but once the tension will release and things will get normal, there will be a sudden drop on gold. But so far, no one knows what's gonna happen absolutely in which direction it's going, but current volatility is very high. So this is what you can see. If you look at the ATR, you'll see that the ATR will tell you the current volatility. Usually on 1 minute ATR in a normal time, it's nearly 30 pip. Okay, so now the current ATR here is around 60 pip, so more than double the volatility at the moment in the market. So if you look at here, okay, now we are at 100 pip on this trade. 106 pip, 110 pip. I'm going to exit now at this level. Okay, to trade. This one I take more of that when I was closing 100 and nearly to 30 pip. So along with this live session today, guys, we made 130 and 290 pip, right? Now, the question is, how can you trade that the same way independently yourself when you are trading, right? How many of you really want to independently trade like that? That's right. Welcome back. Okay. Now you see that we do take the most trade here in the live session almost every day. Now the next step is for you to no problem, you're always welcome. The next thing, guys, is you to become an independent trader, to learn the strategy, to learn the process. You see that it's not hard. The only thing that you need is welcome. The only thing that you need is to know that when to enter. And this trade that I have opened is not a fully developed when we started trading, right? When I started trading, when you started, it's not easy to catch in the beginning. But if you look at both of these trades that I have opened here are buy trade, right? Both of this buy trade. Why did I open the buy trade? One very missing piece that you have in your trading is missing the fundamental. Okay, so you are missing fundamental. And if you look at in the market or in everywhere, guys, you will find that plenty of education about technical, but no education about fundamental, right? Because very few people understand how actually fundamental works. How truly to trade fundamentally, even on the 1 minute chart. Because understanding fundamental will give you directional bias. Always trade in the major direction of the trend. Yesterday I had a question that if I'm trading on 1 minute, then why do I need to look at the higher time frame? Because so that I can align my direction in the higher time frame. You see that both of these trades that you have opened are in the major direction. How do you know that higher time frame? How do you know the major flow in the market? How do you know that which way gold is going to be heading? Understand the fundamental. Now, when it comes down to fundamental, most trader little fear. Okay, I have to learn a lot of, that economical data. I need to learn this. Nothing. You need only 2 pages. Simple explanation. And that 2 pages that I call the advanced fundamental. If you are on the academy, don't miss out that 2 pages available on your student dashboard. Right now, you can log into your student dashboard and access those 2 pages. And that's all you need to understand the overall movement in gold, oil, any instrument, because they follow the same pattern. Okay, there's a saying that if you if it for everyone, okay, you'll see that when you understand something, you can clearly explain it to someone else. So you understand, you explain it to someone else. And when you align that fundamental with your technical, add other dimensions, right? Add timing, add tools, right? We have all the tools also available. Be a trader by learning in actually how to trade the market in the live market. Tomorrow is Friday, all right? And I invite everyone to trade with me here. We'll be trading together to find the best trade possible in the market. Again, we will be trading the next one, core PPI and PPI. In this live session, exactly the same time, we'll see you there again. Keep the profit in your account. Make sure you visit the website link below this video. Join the Telegram, and I'm sharing here for all the promotion and updates so that you are not missing. And straight away you can join today if you want to access everything that we have in the academy.